Hey, this is Chris Robinson, Rob Zach Marty with today's post-close gradient livestock comments. I just sent out tonight's letter. I'm going to do a quick recap for those of you that would rather listen than read. I'm trying to cover all bases here, guys. Also, keep your eyes open. I will be sending out the weekly seminar tonight. Um, Sometime later on, you can take a look at it tomorrow, but we'll cover what's going on here. Big ideas. Hey, this is all about crude oil. If you look at corn and wheat um, for the year, we are right smack dab in the middle of those trading ranges, especially for new crop corn and July wheat. We finished today. The whole entire year, we're in the middle of the range. And the weird thing is, it's not weird, it's coincidental, and it's not coincidental. Crude oil today, when it traded here at 87.35, that's halfway back of the entire debacle of the year. We started the year at 55 bucks in December, hit 119 and change, halfway back. So this is the reset button. And it's also interesting because it's the middle of the year, right? It's June 1st. So we're halfway through the year, and you've got crude oil halfway in the middle of its yearly trading range. You've got new crop corn halfway in the middle of its yearly trading range. You've got July wheat, Chicago, halfway in the middle of its trading range. And the odd thing is, if you look at beans, new crop beans are really outperforming the entire market. New crop beans are within a hop, skip, and a jump of their 30-month highs. So that remains to be the big what if there. And even the action in old crop beans, yeah, it was down for the week, but if you look at where we are overall, it hasn't gotten pounded on as much yet. So I'm very interested, from a marketing standpoint. We're sitting here with 1190 beans, and a lot of people, especially fundamental traders, they're like, we should be at 1150 or 1140. What's holding us up? So rather than stew about it, rather than worrying about the why, just take advantage of it. If you're growing beans this year, we started the year at 10.55, worried about $10 beans. So you have great chance here, and I don't know why you wouldn't make sales here. Get as comfortably sold as you possibly can, and then if you're really concerned, we're going to have $16 beans. If this is going to be 2012, buy a cheap call. I mean, you're selling into a $1.60 rally. Hold back 25 cents, buy a call spread. These corn, yeah, it's not great to be at 475, but we're equally distant now. There's 30 cents to the upside, 30 cents to the downside. Everybody's right, everybody's wrong here. There's still some good meat on the bone. Now, granted, it's been a hell of a year in corn because this is the fourth time we've had a 40-cent swing. And just when you think it's going to pop above, it's been fiddling away. So, July corn, especially, if you look at that, it's really close to taking a peek down at the 10-year bull trend line underneath at 440. Now, a lot of people are interested in technicals. If you don't know a lot about technicals, if you start reading my letter, you'll learn it through osmosis. Technicals are not perfect, but they give us good levels to make decisions on. And I'll be honest with you, 482 was a big level in D's corn. 482 was a trend line. We were dancing above it and below it. And personally, I thought 482 would be a good place to get long. And here we are, at 75. Are we going to take about 482 next week? A lot depends on what happens over the weekend. Is this deal going to stick? It's been 90 days, kids. 30, 60, 90 days, 3 months. And we haven't had a deal stick yet. That's my only concern. And so if this thing falls out of bed and then we come in next week and crude oil is back to, looking at $100, I've got to think that that's friendly for corn and beans. Also, we have yet to see China step in and do anything in new crop beans yet. There was some trade that went on today, but nothing gigantic. China has promised us they're going to come back and do their usual 25 million metric tons, which is what they've done for decades. They're basically going back to status quo. We used to grow 4 billion bushels. Now we grow a little bit more than that, but that was the deal. We grew 4 billion. They took a billion. We argued about it. We huffed and puffed, but they showed up for it. So will they show up for it again? I don't know. They have yet to show up. That's another thing. Why are we hanging in at $12 beans if Chinese haven't showed up yet? Very, very strange. In the livestock, the market, not a good way to end the week. It's interesting. Feeder cattle were not able to fill that gap. Finished down 460 at 348. Hogs under pressure. Hogs under pressure. July took out and settled under the buck again today. The buck's a big round number, so we could get some more sell pressure there. And then lastly, what's going on with money flow? Well, we saw the money flow. It's pretty significant, right? They sold 100,000 contracts of corn. They're still long 200,000, but they dumped a third of their position. Now they did this once before. 2 or 3 weeks ago, they sold 50,000 bushels and we dropped 40 cents. But then they turn right back around and put it back on. So they will put it back on if they want to. But right now they sold 88,000 contracts. They're long 205. They sold 20,000 contracts of beans. They're still long 190. They flipped and got short Chicago wheat. They're now short 18,000. They sold 14,000 last week. If you look at KC and Chicago, they're still long holding that. So they're short Chicago. They're long KC and Minneapolis. Bean oil, they're still long. They sold 15,000 contracts. And the meal, they're still long. They did sell 7,000. When you get to the livestock, however, that's something to watch. They sold 10,000 of their previous longs, and the live cattle, they're still long up over 120, but they sold some there. They sold a chunk of their position in feeders. They had been long 15 or 16. They sold 6,000. They finished the week long 10. But the biggest surprise is what they did in hogs. They dumped 21,000 contracts. They're now still long 13,000 contracts. And this money flow is what's driving a lot of things. A lot of people think that lean hogs should be a lot higher based on the numbers. But right now, we are suffering money flow. So that's it. This is Chris Robinson, Robinson Ag Marketing. Take a look at the letter. I'll be sending out the weekly wrap. I'll be sending out the 15-minute webinar. And have a good weekend. We'll be back at it Sunday night. Have a good one. Take care.